welcome to the World Lens podcast. I am your host, Michelle Evans, and I am joined today by my co-host, Bruce McIndoe. How you doing, Bruce?
Okay, some ups and downs, but we're all living through it.
That is true. So today we're tackling a topic that's pretty relevant, de-dollarization. I want to start by asking you for a definition. What is de-dollarization and why should we be concerned about it?
So I guess at the macro level, de-dollarization is the process where, other nations want to reduce their reliance on the US dollar for international trade and financial transactions and their own currency reserves, and shifting that to other currencies or alternative mechanisms like cyber. So that's, I guess, like the definition.
Okay. So the big concern is because the US dollar has been the reserve currency since right after World War II, we want to define that for our listeners too. What is a reserve currency and why is it important?
I guess, yeah. So let's talk about de-dollarization. Then we can talk about kind of the reserve part of it because we should be really concerned if we lose our dollar's dominance that, is underpinning all of international, or, 90% of international trade is done in the dollar, right? And
Hmm.
so that gives us, economic strength, it gives us political influence and, strategic leverage. It keeps our interest rates low, which is important with our ballooning debt.
Hmm.
And so, if nations move away from the dollar, we're going to face, staggering, increases in borrowing costs, but also the influence that we have. So that's kind of that. And then, so that's the dollar in trade. When you talk about a reserve currency, um, to bring this home, would be like if you have money and let's say that it's foreign, I don't know, yen in Japan, right?
Hmm.
You have two choices. You can keep it in the banks and keep it as yen, or you can transfer that yen and buy gold. And that's what we're seeing right now, where people and countries are buying gold because while I can't transact trade with gold, I can stabilize the value of what that currency is to me,
Hmm.
in gold, right? So that if that starts happening, where people don't hold dollars because it's considered as stable, like almost as stable as gold, then we see what we're seeing today, and that is people are shifting and getting rid of dollars and buying gold, and gold is up, I don't know, $3,500 an ounce or whatever right now.
Hmm.
So it's a critical mechanism for countries to stabilize and retain stabilization in their financial system. So central banks, governments, all use the reserve currency, which is right now largely the dollar, to do that. And with all of the shenanigans and ricocheting and everything that's been going on, people are losing trust in the U.S. dollar, and that's a big concern.
So how has our economy benefit from being the world's reserve currency?
Yeah, so that's what I was saying around the dollar being used as trade is a big concern as people look to do other ways. It's like it significantly benefits us, and
Hmm.
I would say the biggest issue for the U.S. is this huge debt that we're carrying. We have to pay interest on that, and so if people have less faith in the dollar and then interest rates will go up, and so we're going to
Hmm.
be expending more and more. But it also gives America kind of just major advantages in kind of global trade. But it's also these kind of it was we've seen, and they call it the weaponizing of the dollar, right? Where we've gone out as far as like economic sanctions and other foreign policy things that we're doing, kind of using it as a hammer. And this is a huge privilege that we have. And right now, there's a lot of countries, China front and center, and others that would very much like to move off the dollar or diversify from the dollar,
Hmm.
to remove that kind of leverage that we have right now when 90% of trade is done in the dollar.
Yeah. So, this is a concern right now because of Trump's market volatility. Has the US dollar ever been threatened as the world's currency prior to now?
So the answer is yes, and there's a little bit of history here I think that's important. When we came out of in the end of World War II, 44, 45 in that range, we had the Bretton Woods Accord, right? That was a system where the dollar was pegged to gold, and everyone agreed they would use that as the baseline for global trade, and then other currencies would work against that within a percent or so. There was so that
Hmm.
was the Bretton Woods. So all of that from the end of World War II to the 70s was very stable. Then when the U.S. came off of the gold, backing of the dollar, that was really the first time that nations are like going, maybe we should look at this, or maybe hedge our bets or whatever. And but the United States was continuing strong. We had low debt. We
Hmm.
continued to support the globe. But then when the financial crisis hit 2008, then we had another kind of wavering of the dollar. We're off the gold standard. We're having this potential financial system meltdown. We have increasing debt. And that's when the chorus started to get louder about, not relying totally on the dollar and to have other currencies. And China has been pretty aggressive in being front and center on that. And
Hmm.
so, I think about 5% now of global trade is on the yuan. So that's where that is.
Okay. Speaking of that,
Hmm.
hypothetical, let's say the dollar does lose its status as the worldwide reserve currency. Like you mentioned, China. Is it that easy for them to just come in and fill in the gap with their currency?
Yeah, again, in theory, China's yuan could, I would say partially fill that gap. I don't think it's not, the dollar's not going to lose its status. It's going to lose its importance, on a percentage basis, which it has been, obviously, a little bit from virtually 100% to 90%, but we can see that probably accelerating. But China faces a lot of headwinds. They have concerns around capital controls, lack of transparency,
Hmm.
limited convertibility. So it doesn't really make it that attractive.
Hmm.
They have been aggressively promoting yuan dominated trade. So, like with Saudi Arabia, when they're buying oil and those kinds of things. So, that's how they've started to kind of force trading partners to use their currency, and how they've built up this 5% position. So, I think everybody remains cautious about relying on China and the yuan,
Hmm.
but it's I think we will see more focus now, given everything that's happened in the last months, that
Hmm.
the world's gonna change the game.
Yeah, there's like a broad realignment happening in the global markets. Another hypothetical. Do you think there's a need to be or to have a reserve currency? Could multiple currencies like kind of work together to fill the void of the dollar?
Yeah, I mean, yes, like I said, we're already seeing some movement, right, to this like multipolar currency system. The euro, the yuan, yen, even the British pound, collectively, have roles out there. The challenge, as we, like I said, when we had the Bretton Woods Accord, it created a very stable, consistent platform for people to trade. If we start getting multiple currencies, and then these countries that have currencies can start tweaking and playing around with their currency, uh, conversion rates and those kinds of things, I think things get very complex, and it will be a challenge. And then the other thing, again, China being one of the major proponents in having a global cyber payment capability, right? And,
Mm-hmm.
uh, and
Mm-hmm.
and and using and pegging to that, but then where we were pegged to the gold standard in the past, I don't know that pegging something to a virtual cyber currency is a good plan. But anyway, so I think we're already heading that way, and I
Mhm.
would love to see another Bretton Woods, two would be appropriate.
And so you mentioned how the monetary system worked off the gold standard. Is there a chance that the monetary system will again be tied to like some kind of commodity outside of cyber?
Yeah, I guess that's maybe my idea of like a Bretton Woods too, right? It's like, is a full return to like the gold standard. I think is highly unlikely. There has been talk about commodity backed or partially backed currencies to provide more clear stability and trust. Um, but I think transitioning the entire global monetary system back to a strict commodity standard, I think would be, I don't know, hugely disruptive, really impractical, and I don't see that as a positive outcome. That we
Mhm.
would be able to do that.
So is there anything the US can do to prevent the de-dollarization trends?
Uh, yes. Let's go through maybe some of the key ones. Right out the gate, and if we, I mean, we're basically in an experiment, right? A monetary experiment right now, right? So
Mhm.
the top line would be maintaining stable monetary and fiscal policy, right?
Okay.
Reducing debt, preserving the predictability and confidence, right? That would be like the top line. Well, right now we're not doing that, right?
No.
And so that's concerning, and why we're having this conversation, right? Number
Mhm.
two would be, okay, that's what we're doing. Well, we also have to strengthen our strategic alliances and our trade partners, and maintain that global reliance on our US financial infrastructure through those relationships. And again, we're not doing that. We're actually annoying and ticking off our trading partners, and
Yes.
we're not strengthening our alliances. So that's not happening. um, the weaponization, right? Not
Mhm.
using the currency as a cudgel, right? And this aggressive use of it for sanctions and those kinds of things. No, that's also gets people to walk away from the dollar again. We've been
Mhm.
doing that. So, and I think the other piece, and we've uh, I would say this would be the one thing that I see happening that's kind of innovating around, okay, should we look at a digital currency technology for financial tax transactions globally? We should. We should be leading in that. And right now, we're not leading in that. And if anything, we're leaning more into like private sector innovation in digital currency versus US government led. So those would be the four things. And right now, all four of them, we are not firing on any of those cylinders
Right.
to create stability in the dollar.
So the short answer is there is stuff that we can do, but we're just not doing it.
There are things, well, there are key things that we should be doing, and we're not doing them. Yes.
And so, Bruce, on this podcast, we try to discuss these major shifts because so many of our listeners are working at companies dealing with these issues. But I want to zoom in and talk about the normal people. Let's say this de-dollarization trend happens. What does that mean for me? Does it mean my exchange rate is worse when I travel? Should I start buying euros, yen, won, gold?
All the above. Let's see. Great questions. It is something very practical for all of us to think about. I mean, I've been thinking about it. I'm going to be in Europe quite a bit toward the back end of this year, and
Hmm.
have actually purchased euros about 3 weeks ago as I
Hmm.
saw it rising against the dollar, and I thought, well, if it goes back down, then I'll be okay. But if it continues to go, and I think it will, then I'll be, I don't know, 15, 20% ahead of the curve, right? But that's
Hmm.
on a very narrow look at. I would say, um, international travel will become more expensive. I think that's a given. So as you go out, like when I, you know, purchase hotel or I buy food or whatever when I'm in Europe, it's going to be more expensive. And
Mm-hmm.
so that's one of the reasons I'm kind of hedging on that. But so, exchange rates when you're traveling abroad will likely worsen, and meaning that you're going to get, fewer euros or yen or, whatever for your dollar. So, buying that, it's fine, but it's not really a big strategy. The bigger strategy, I would say, is to diversify your investments rather than trying to jump in and out of currencies. And so if you're looking at trends and what's happening, and if you have a financial advisor, that's who you should actually talk to, and start looking at shifting some exposure from the U.S. to the international market so that you can have a more diversified portfolio. So absolutely, and personally, I'm doing that and have done that over the last year, increasing the percentage of my portfolio in global assets. So that's, I think, a good move.
Okay. I mean, we're not going to end up like pesos, are we?
That the world would be in a real big hurt if that is the end point. So no, I don't think that'll be the case. I think, again, we'll have this multipolar. We could have multiple. We could have, kind of a Chinese, BRICS plus, economic kind of trade model with the yuan, Western U.S. on their own, and then Europe and Britain, and then India is going to be rising. So I
Mm.
can see a future where we will have these multiple currency trading groups, and then they'll convert between each other, and that's probably a pretty likely outcome in the decades ahead.
So, what are the signs that I need to watch for to see if this trend continues? I read something today that said if the de-dollarization happens, it takes decades for it to actually like be meaningful. But I saw that the price of US Treasury bonds, it's a lot happening with that. Is that a good indicator to watch something like that or
So the short is yes, and
Mhm.
this this may not take decades. It could be very disruptive. That was one of the major issues between how China, who holds I think the most U.S. debt in outside of the U.S., could just start selling treasury bonds, and that would be
Mhm.
major impact on us. But I would say yes, the treasury bond prices and yields is a very helpful indicator. It's tied directly to that global confidence in the economy and everything that we've talked about. So when countries are selling treasuries or even reducing purchases in the US dollar, then the yields will rise, signaling the decline in confidence. So if you look at like the financial media, they're always talking about if the yields are going up, that means that people are losing confidence in the U.S. dollar, and we've seen that in spades in the recent
Mhm.
weeks, right? But it's not just bonds. You also have to pay attention to kind of international agreements, and like it said, is China is buying oil from Saudi Arabia and saying we will buy it from you, but we're going to buy it in yuan,
Mhm.
and so that's then takes that out of the trading system and increases again the yuan as a currency for trade. So China's using that with their trading partners. So kind of keeping an eye on that. And if you start seeing more of that, and you see the European Union starting to push their trading partners to trade in euros, that will
Mhm.
also be a huge red flag that we're more rapidly de-dollarizing than we have, in the past.
So, keep your eyes on the news.
But yeah, I think everyone is tied to their economic, backstop, whether it's IRAs and their income and investments. This is
Mhm.
a very important time to be paying attention to your dollar, and right now we're not taking good care of the dollar.
Hopefully it changes for the better soon.
Well, we saw, just the reaction recently where I think the administration got enough incoming missiles on them around everything that's going on, that they've substantially de-escalated a lot of the issues that people were had angst about. So
Mhm.
I think they're perfectly aware of what they need to do to calm the markets, and I'm hoping that they will continue to do that.
Same. Bruce, thank you so much for joining us today.
Yeah, my pleasure.
You all can find Bruce on LinkedIn or at mcindowriskadvisory.com. And as always, please follow us on all social platforms at WTC Institute or visit us online at WTCI.org. See you next time.